Mr. Sudhir and our chairman Harigovind Prasad Garu and our co-chair Nikshit Hemendra Shah and the distinguished participants and all these things. Warm welcome to all of you. I request our Senior Vice President Meela Jaydev Garu to give his welcome address to the audience.
Thank you very much, Lakshmi Garu. Very good evening. It gives me great pleasure with the extent of my warm welcome to our esteemed speakers. CA Abhishek Murli Garu, partner, Victor Grace and Company, Chartered Accountants in Chennai. Sudhir Garu, Chartered Accountant, VS Sudhir Garu, partner, Harganj Estates, Chartered Accountants of again and chair of GST and Customs FTCCI. Chartered Accountant Harigovind Prasad, Chair Direct Tax Committee. Chartered Accountant Nikshit Hemendra Shah, Co-Chair of Direct Tax Committee Chairman. Direct Tax Co-Chair. Designated participants, I welcome all you to this webinar. Understand that interests of the tax audit report under the Income Tax Act. The tax audit report in the form 3CD contains clause 44, which deals with reporting requirements related GST expenditure and is the significant cause of concern among the tax auditors and the assessees. The confusion seen is related to GST expenditure and is significant cause of concern among the tax auditors and the accessories. The confusion seen is related applicability of clause 44 of Form 3CD for the assessment year 2022-23 or financial year 2020-21. Clause 44 of Form from 3CD requirements reporting of the total amount of the expenditure incurred during the previous year. The heading of the clause 44 requires reporting of the breakup incurred. Further, this clause is required to be reported by all reporting assessees, whether the assessee registered under GST or not. In view of this, FTCCI organizing webinar on particular insights, clause 44 to understand the implementations. I'm sure that deliberations will enrich our knowledge. I thank you very much for attending all. And Lakshmi Garu, is there any possibility to show our FTCCI video?
Yes, sir. Sure.
Can you play FTCCI video? All the new members also is there. It can be helpful to all the members and FTCCI.
Okay, sir.
The permission from Sudhir Garu and
it would be our pleasure, sir.
yeah. Just we'll show our video.
Only 1 or 2 minutes. Okay, no problem.
1917, the year when a dedicated organization, the Deccan Chamber of Commerce, was formed to encourage trade and commerce activities. The historical journey of the organization has witnessed great transformation as per the changing needs of the industry and businesses. The Federation of Telangana Chambers of Commerce and Industry, FTCCI, a legacy of excellence, voice of the industry, representing interests of over 25,000 businesses of all sizes, sectors and regions, is empowering industry and trade of Telangana state. A world leader in pharma, a global hub for vaccine, home to all major MNCs, leader in IT exports, an emerging first stop of India. FTCCI advocates a pro-business environment caters to the needs of MSMEs, budding entrepreneurs, and traders through its advisory services in taxation, market information, industry-related issues, B2B connection. The Chamber has its nominees in the state-level advisory committees to help drive business productivity. FTCCI aids in providing Certificate of Origin for exporters, issues visa recommendation for business travels. The Federation imparts job skills through its dedicated skills center. It has adopted 14 government ITIs to improve the employability of students. With a uniquely global perspective, the FTCCI events reach a highly engaged audience, policymakers, and stakeholders aiming towards Atmanirbhar Bharat.
FTCCI to work with government, tell us and guide us कि हम लोग क्या कर सकते हैं to remain competitive, to remain better than our competition. FTCCI for joining us, and I thank the office bearers of FTCCI for inviting me. Jai Telangana, Jai Hind.
Come and be a part of this dynamic and proactive organization. Together, let's realize the vision for a progressive future.
Thank you, Lakshmi Garu. Very nice. Thank you.
Thank you very much, sir, for your welcome address. Now I welcome our Chairman, Direct Taxes Committee, Sri Harigovind Prasad Garu, to give his introductory remarks.
Good evening to everybody. I'm Harigovind Prasad, Chartered Accountant, Chairman, Direct Taxes Committee. This is the very innovative thought of the government to come with a backdoor as expenditure tax again. Chidambaram have also tried banking tax. Many innovative things we have come across. The origin of tax audit purpose was to act as a facilitator between the SSCs and the government. Unnecessary taxation, assessments, high pitch or harassments can be reduced by professional people through their expertise as a bridge between the SSC industry and the government in terms of compliances, taxes, receivables, and reporting. Accounting and reporting are two important aspects wherein different stakeholders comes into play and different taxes SSC has to go through. As an industry which is suffering a lot on compliances, this is a further addition to them to submit the papers, documents, information, which is not required in the respective law which governs and covers it. More so, GST is a very new act, hardly 5 years has come in. Though income tax is certain, it goes with the death, it is said. But GST is indirect tax, which is overcoming and taking a place in the form of Clause 44 in Form 3CD, which is definitely as a chartered accountant, as a practitioner or a professional or SSCA, everybody is interested to be transparent and comply whatever the government asks. There is nothing as such that they wanted to hide, make money out of it. The very purpose of this inclusion and doing away the GST tax audit, I'm saying, GST tax audit has been done away with by the government, and instead of that, where GST law doesn't require reporting in their annual returns. More so, it is very difficult when on one side, you give exemptions of various nature to various people in terms of limits and non-taxability, non-GST, exempt, nil rate, zero, etc. On the other hand, you want all those things to be reported. The purpose behind is not known very clearly. But there is a talk going on that the government wants to bring tax, have information on unregistered taxes or entities which are going unreported or uncomplied or not paying or whatever. Though it is a complementary from our side and the SSEs that our tax revenues from the GST, which is indirect tax collections and direct tax collections, are going up and up, despite all ease of doing businesses, what we are talking. That means if you see in income tax also, 80% to more than 90% tax collections come from TDS, advanced tax and other modes. Only hardly, if you really see what for the department is there, when all faceless and every invisible or online things are coming up, what is this again compliance burden and neck tying to a chartered accountant will help to the government is a matter of concern. Also, I just wanted to tell you that we have for this clause which is postponed from year 18 onwards to 22. There is a little bit confusion, as rightly said by our senior vice president, that there is a confusion to the industry as well as compliant people, plus chartered accountants who have to report. What reports? If we see in detail, it is told that it is mandatory effective from 1st April 2022. Whereas if we see by the 25th March 2021 notification, it says it is kept in abeyance till 31st March 2022. Now, no assessment year starts unless the financial year or a previous year ends. Earlier, there used to be transitional year, which used to be different previous years for different assesses following Diwali, etc. and all. But that is not there. So definitely now guidance note of the institute has to be followed as a Bible, and professionals cannot escape it. So they are in a dilemma whether the assessees who are more or less moved from manual to the softwares or computers, are they prepared? Are the softwares prepared? Are the reporting requirements which are there for unregistered, registered, and further registered, which our experts are going to say? We have two eminent experts, Abhishek Murali, a very prominent chartered accountant, which my co-chair is going to introduce, and you will be happy to note his achievements. And V.S. Sudhe, another chartered accountant and wizard in indirect taxation. I hope to see him in definitely national seminars and conferences asked by the government, and definitely will guide the officials and the CBIC that please don't squeeze so much. Definitely, compliances has to come down. In between our vice president Suresh Singhal ji, सीनियर वाइस प्रेसिडेंट का है, स्पीच जो आया है अभी मेरा चल रहा है इंट्रोडक्शन, आपके परमिशन से। नहीं प्लीज करें। Our vice president Suresh Kumar Singhal is also from the industry. Always he is also saying that compliances should come down, which I was just mentioning. See, clause almost sector specific requirements reporting is there. Now, earlier, new amendment also has come as a recommendation from the institute as a guidance note on the reporting, financial reporting for non-corporate entities also, which has been just last month. They have made it as a recommendatory on 14th August dated with 19th August as a. If year is over, now you are asking how a professional or an industry can cope or comply, though they are interested to comply. Nothing to hide. Everything is transparent with all digital payments, everything, because I am taking well in advance for the purchase. So why I will not comply and take the input tax credit? It is a double loss to me if I do not do file return, etc. So this clause 44, which has been brought with a notion that just to report, how to extract is a difficult aspect. Time is not sufficient for client to submit to us and industry to respond to us. And for if we make a representation, only relief here, what we see in clause 44 is that whatever the reporting is there, it is not advised, as well as there is no effect of allowance or disallowance of the expenditure for the moment. But definitely, if you go practically while submitting the tax audit report as a professional, every point which is red marked has to be compulsorily, mandatorily complied with. But when it comes to clause 44, it is not red star marked. So there is a dilemma again, whether to disclose, which is a breakup of expenditure in the total form, and matching is there or not, because several exceptions are also given. So there is a one-to-one matching will be there or not, and service sectors or exempt sectors, nil rated, petroleum, bunks, bar and restaurants, liquor, etc., or many other GTA services which are outside the purview of in the form of exempt or nil rated or zero rated or not compliance, even non-registered entities have to comply if they are having taxable tax audit compliance reports. So all these details in minutely, because several discussions have taken place for professionals, but this is the first time that we are, as a chamber, 105 years entity is interacting and giving with the specialists across India. Mr. Abhishek is from the Chennai and Sudhir also is from Bombay and national speaker. So I wanted to tell you that they are going to delve in detail, but why we have titled as practical insight is that we don't want to talk on guidance note sections alone. We are going to talk about, our experts have prepared that straight away from your balance sheet P&L, how you can straight away go what is to be reported and complied with. I have requested them also for interest if this is a need of the other, that they are novice into this, they are not experts into this. You have to tell in a straight away tomorrow compliance mode what they have to do. As well as I request Sudhir sir and Abhishek to give what are the important disclosures as a professional we have to do and disclaimers, because we are only in between as a knife. Anything has to be lost for our industry and SLCs only, because if we report, tax will come or not. So we are nothing going to lose, but we have a role as an expert to guide them properly. And it should be in the win-win situation, government requirement, whatever it is there, we are able to do it in the short time. So over to my good friend, Lakshmi will say that Nikshit is going to introduce. Thank you.
It gives me immense pleasure to introduce the eminent speakers for the evening. I'll start with CA Sudhir. He is a fellow chartered accountant, core partner at Hire Gange and Associates. He heads the Hyderabad branch, which provides consultancy, audit, and litigation services in indirect taxes. He has done his entrepreneurship development program at IIM Ahmedabad. He has contributed various articles for professional institutes like ICI, Institute of Chartered Accountants of India, Institute of Cost Accountants of India, and trade journals Service Tax Review and Manupatra. He has presented papers at various branches of ICI, ICSI, ICWAI. He is a master trainer for ICI New Delhi and a faculty in National Academy of Customs, Excise, and Narcotics, which trains the departmental officers. He has presented papers in various trade forums like ASSOCHAM, KSCAA, TAPSI, YI, AP Plastic Manufacturing Association. He is a visiting faculty at Watson Business School, BITS Pilani, etc. He has also is a joint author of Practical Guide to Service Tax and How to Tackle Service Tax Problems. So with this, I introduce CA Sudhir Garu, and now I take privilege of introducing.
Sir, Mr. Sudhir is extempore speaker and he is a managing committee member of our 105 years institution FTCCI also, and he is heading the GST and Customs Committee as a chairman also. He has several plans along with us to do programs in future.
Thank you very much.
Now I introduce the other speaker, Mr. CA Abhishek Garu.
Star speaker
from Chennai. He is an MCOM, ACA, CISA, and he has completed his advanced diploma in management accounting from SEMA London. He has worked in PricewaterhouseCoopers and KPMG earlier, and currently he is partner at Victor Grace & Co, Chennai. He is youngest partner of the firm. CA Abhishek is a consistent academic topper and secured the All India first rank in his SEMA examinations. He is a prolific debater and moot court speaker. He has won many prizes in inter-school and intra-school competitions. He has authored a book on Companies Act 2013 and co-authored a book on Role of Independent Actors in Corporates. He was co-opted member of Corporate Laws and Corporate Governance Committee for members by Institute of Chartered Accountants of India in the years 2013-14 and 14-15. He was also a member of Research Committee in the year of 14-15. He is an active Freemason and member of Hindustan Chambers of Commerce. He is also part of core team of BPAM, an NGO which helps underprivileged children. With this, I introduce you and open the forum for the speakers.
Sir, I have to tell all the participants that earlier also we had the opportunity of interacting and listening to Abhishek Murli on RERA real estate transactions. And it was also again a hybrid mode, but at a very, very short notice, he has accepted our invitation, and more than 250 participants have engaged themselves, and nobody has moved out for such a prolific speakers listening to him. So again, today also, you are going to have, sir, for your information, more than 150 people have already registered and they are joining one by one. And over to you, sir.
Thank you so much. Very, very warm good evening to one and all present here. Firstly, the President of Telangana Chamber of Commerce in absentia, Mr. Anil Agarwal, Senior Vice President Neela Jaydev sir, and his very wonderful address and wonderful video also. The Vice President Suresh Kumar Singhal-ji, the Chair of Direct Taxes Committee, my very good friend and mentor, CA Hari Govind Prasad sir, and a very doyen in our profession, I must say. And of course, CA Nashid, who has given me a lovely introduction. Thank you very much for the wonderful introduction. And I also want to thank Lakshmi Madam, who is there on the dais. She has been coordinating and very kind. Any doubts I have immediately, whether it is at 11:30 at night also, immediately she sent me the details I sought for. So thank you, Madam. And my co-speaker, very dynamic GST expert, Sudhir. Thank you very much for joining me today. It's an honor to be invited in this very prestigious association to address the members. I know it's a very old association with a lot of people from industry and the profession. So to address this gathering is a huge privilege. And as I jokingly was telling Hari sir when we were talking today morning, I said, how much ever I try to run from GST, GST is closely running behind me. So even if I specialize in income tax, they will remove GST audit, they'll surely integrate it into tax audit also. Why government are doing this, please don't ask me. Maybe they want to remove GST audit, same fees what you're doing tax audit, in that same fees itself you can do GST audit also. Maybe that is the idea. I don't know. But frankly speaking, any professional will tell you this clause 44 today is a big, a bone of contention, a bone of confusion. And thankfully, I have Sudhir ji here to assist me. So if there's anything regarding GST that I may get wrong, Sudhir ji, please, I request you to help me and guide me and maybe direct the members in the right way. Now, getting into this clause 44, the first thing that as rightly pointed out by Hari sir is the question of the applicability. It has been pushed for multiple years now. Every time we will see the clause 44 in our tax audit report and we will skip it and we will go. We don't even know. In fact, till it became compulsory, I did not even know what headings are there. So currently this year, when the headings, they said it is compulsory, you must do it. That is when we started reading it. So the question is whether it is applicable or not. As Hari sir very rightly said, and in fact, to tell you the truth, before he told me yesterday, I did not even realize it is optional. You can still file your tax audit report in the current year without filling up clause 44. But having said that, our CBDT has made it very clear that when they say we have pushed the last date to 31st March 2022, that means it is applicable for that financial year. I don't know why they use that date, 31st March 22, because it's the end of the year. You will not maintain the records. Maybe as on 31st March, you can say why you did not maintain record. But rest of the year not applicable. No, why I would have maintained the record for the rest of the 364 days. So that school of thought is there. Maybe that is why they have not made it mandatory. But as far as the ICAI is concerned, even the guidance note sidesteps this issue. It does not talk about applicability. Nowhere they are saying it is applicable, not applicable. The presumption is that it is applicable. And majority of the persons also are assuming that it is applicable. So if you ask me the question, can I skip it, Abhishek? Then I would say that you have to do it, but at your own risk. Because the truth is, if later on 90% of the chartered accountants or the companies comply with this and 10% don't, it will reflect poorly on the 10%. And maybe now, of course, there's a tax audit quality review board, which has been constituted very recently by the ICAI, and they can take up this issue and maybe say that you have not followed what needs to be done or what needs to be reported. So therefore, applicability, in my view, it is 100% applicable. So next question that people ask, is it applicable to persons where GST is not applicable or they are unregistered? The next major question, whether it is applicable if GST is not at all applicable to you or you're unregistered.
The answer to that, once again, every single person who is subject to tax audit must fill clause 44. Once again, there is no exemption. I may be an advocate who is subject to reverse charge basis. I may not have registered. I may be a doctor. I may be a hospital. In all of these scenarios, there may not be any necessity for me to register. But because I'm triggering that tax audit limit, be it 1 crore or 50 lakhs or 10 crores or whatever it may be in your respective case, automatically that means clause 44, reflecting it and filling the details, is absolutely mandatory. And please note, this is a very, very important point. And I want to make this point before I proceed with the rest of the presentation. Being somebody had asked me yesterday, the moment I shared the poster for this, I got a call and they said, Abhishek, if we don't report under clause 44, what is the risk of not claiming the expenses in income tax? Will they disallow my expenses? Now, let us assume I have done a regular tax audit. You forget clause 44. I have done a regular tax audit. Then suddenly now clause 44 comes up, and let us assume I skip it or I don't fill it properly. Whatever is registered, I'm putting as unregistered. Whatever is exemption, I don't have the details, so I'm skipping it. Whatever is total expenditure, I'm putting some other amount there. So all of these issues are there. Now the question arises, because I have done this, how is it going to affect my income tax computation? Will there be any disallowance? Let me make it very clear over here. As far as Income Tax Act is concerned, the only requirement is your expenses must be wholly and exclusively incurred for the purpose of business. As long as you have done this, you need not worry about clause 44 at all. It is just a table that needs to be filled. It is, in fact, logically, clause 44 is meant more for the GST authorities than for the income tax authorities. Because how does it matter to income tax, whether it is unregistered, exemption, etc.? It is meant as a method for the government or the departments to track people who are having transactions which are getting unreported or uncaptured. That is the purpose of this clause 44. So do not worry if you make a mistake here, you don't fill it or some issue happens, it will not affect your income tax computation. But that brings me to my next point. I just told you, if you're someone who's unregistered in GST, you still have to report clause 44. Now, here's a very, very important point, and I think Sudhir may cover it in his presentation, which is under GST law. If you are a registered person under GST law, the GST Act mandates that you must maintain a certain number of records. And those records include what are the transactions you are having with exempted authorities, what are the transactions you're having with composite suppliers. All these details has to be mandated to be required by the GST Act, which means if I fail to maintain it, maybe income tax, I will not suffer any consequences. But in GST, I'm at risk at exposure to penalty or any penal action that can come. So therefore, even though I can make, so we were discussing this with Hari once again, sir. We were saying that what is the risk if I say details are not maintained by the assessee? So therefore, I'm just putting a disclaimer and I'm filing my tax audit report. Clause 44, I am not filling. The risk, sir, is not under income tax, but under GST law. Today, of course, our friends start sharing the information. 26 AS itself, last page, entirely your GST turnover. Month on month is coming. All the details are getting captured. AIS, TIS, 26 AS. That means if, for example, I make a mistake here by reporting something that I ought to have complied with under GST law, then I put myself or I open myself to risk over in the GST Act. Forget Income Tax Act, in the GST Act. But when it comes to your exempt dealers or people who need not be registered, then the law does not mandate you to require to maintain the records. If I'm registered, then I'm supposed to maintain. There is no distinction whether you're Ambani, Adani, or Appaswamy, or whoever the smallest person you can think of. You're all supposed to maintain the same records. But if I'm not registered at all, nowhere in the Act it is mandating me to maintain these records. So therefore, if your assessee is not subject to GST or is exempt, do not worry. If you're not a registered person, you can confidently fill saying that these details are not maintained by the assessee because it is not required to be maintained under any act. So you can confidently skip 44. And Hari sir, to answer your question, I think that is why it has been made optional. It is not made optional for everyone. It has been made optional specifically for these people who do not have to maintain the records. So therefore, they cannot report it. So otherwise it will become like our income tax website, where certain details you have to fill, but then it is not allowing you to fill, then you cannot respond to the notice also. Or at least that was the case for months together. Only now they have rectified certain things like our challan number, etc. So that is what the specific point is when it comes to people who don't have to get registered under GST. Now let us come here to the table itself, the very, very infamous clause 44 table. So 7-columnar table, which has total expenditure, and then you have a breakup between the registered entities and unregistered entity. In registered entities, you have further breakup relating to goods exempt, people who are in composition scheme, other dealers, and 6th column, which is a total of the first 4 columns. So that is what it is. So one of the very more common questions, do I have to give a head-wise breakup? If you have filled clause 44, you know that there's one small button there saying add details. If you click on that add details, you will have a breakup of head-wise, you can fill it. So am I required to give head-wise breakup? If you are a person who is very brave and very, very compliant and you have all the information, happily you can give it. But our institute guidance note also is luckily come in the favor of our, our professionals and the assessees, where they have said it does not envisage that you have to give a equal line-by-line breakup. As long as you give an overall figure, that also is enough. So you do not have to give a line-by-line breakup. Maybe you can, if you are not sure of any figure, it is better you avoid giving the line-by-line breakup, because otherwise it will become false reporting or incorrect reporting. So my view, let us go by the institute guidance note, take an overall figure and report that. That is the best thing to do over in this situation. So next is, what is your total expenditure? I told you column number 2 is what is total expenditure. So what do they mean by total expenditure? Because once again, there's a lot of confusion over here. Do they mean payments or do they mean expenditure? So payments means what are the amounts that have gone out, or expenditure means whatever is booked in your books of accounts. So which is it? Please let me know. So therefore, there is a lot of confusion here, and here we can assume that it is expenditure. But the big question is, expenditure here does not mean your expenditure that we are regularly used to in income tax. When it comes to income tax, usually when we say expenditure, 95% of the time we only talk about revenue expenses. We never talk about capital outflow as an expenditure. So it is never mentioned there. We usually say investment, or we say transaction, capital nature. We do not call it an expenditure. But in columnar 2, there is no distinction between revenue and expenditure. The most critical point here is you have to show your total outflow, be it your revenue or your capital. So ensure that you capture both of them. So what has to be excluded? Now I'm saying revenue has to be captured, capital also has to be captured. What has to be excluded from this list? So you need not include the following: expenses in the form of allocations, which are not real, which are notional in nature, like your bad debts, depreciation, and third most important things, items not covered by GST, which is under Schedule 3 of the GST Act, like your remuneration, purchase of land. All of these are not considered to be GST taxable transactions at all. So you need not report them over here. But if it is exempted or nil rated, then it will not come here. Please note, there is a distinction. And maybe people who are very familiar with GST, this may be normal. But for persons who don't regularly deal with GST, this is a bit confusing for them, where items not covered by GST need not be reported in columnar 2, but exempt or nil rated items must be reported here. So that's a very, very important point. Not covered is different from exempted and nil rated. Now, exempted expenditure relating to your exempt services. So now that we are clear about what needs to be captured, columnar 2 is your total expenses. Then 3, 4, 5, and 6 is a breakup of that. It is a categorization of it. So what is the first thing that they want you to report is which and all is exempt suppliers that you are working with. So here, as we already discussed, the act is very clear. Anything that is nil rate of tax or wholly exempt from tax is considered to be exempt supply. So whether it is zero tax or exempt from tax, that has to be reported here. So therefore, whatever is wholly or partially exempted by CGST or IGST can come here. Non-taxable supplies like alcoholic liquor, supply of petroleum, high-speed diesel, motor oil, etc. has to be captured over here. Whatever is nil tax has to be captured. Next column is your composition scheme. And this column is causing a lot of confusion. In a practical scenario, There is a major confusion over here. The confusion being, we all know if you come under composition scheme, there are certain criteria. They cannot charge GST on the invoices. They cannot make interstate supply. He can only issue a bill of supply and not a tax invoice. And he should also say that it's a composite dealer, so I'm not eligible to collect tax. All these details has to be furnished. The problem when it comes to composite dealers is nobody captured this information anywhere. If it was composite dealer, it was just blindly put the entry, don't need to note any GST number, nothing. Because even in, I think, GST returns, 9C, etc., that table 2, I think table 14, where you have to furnish this information is also optional. So GST authorities are saying it's optional. If you want, you fill. Who will come and fill? It's like our 112-day schedule. Till it was made compulsory, nobody wants to fill. Only after it is made compulsory, we will fill that schedule. So the same logic there also, table 14 was made optional. So nobody has filled it till date. I don't know if anyone has actually filled it. To my knowledge, nobody has filled these details. So nobody is actually maintaining the records. Who are the composite dealers? What is their GST number? Where is it recorded? How much is transaction with them? Is it regular? Is it aggregate? What are blocked credits? What is reverse charge? All these details are not at all maintained. So therefore, there will be a big challenge if you have to report this figure exactly. So therefore, in my view, it is probably not at all possible to capture this composite dealer details properly, maybe even in the largest organizations. So I would say that going forward, the takeaway from here is we have to advise the client, and we have our vice president, sir, who is from the industry. So it's a request to him that maybe he can advise his fellow industry, the persons who are part of this chamber of commerce and other chambers of commerce, that they need to capture this data when they are booking it in the expense each time itself. Because unless the GST number, etc., is noted, it would be literally impossible for you to comply with those details, whether this year or any year in the future. So that's a very, very important point that has to be considered. So relate column number 5, expenditure relating to other registered entities. This is fairly straightforward. Whatever is not covered in the first 2 columns, it has to be captured here. So it is like a balancing column. So this is your, but please note once again, when I say balancing, I mean for registered entities. Unregistered, you have a separate column. So whatever is registered balance, you have to fill over here. Yes, I know most of you are asking the question, Abhishek, how will we find out whether registered or unregistered? I will come to that. That is why specifically we have allocated some time to discuss your disclaimers and disclosures and comments that need to be given. But frankly, like I was saying, I had a discussion with a chartered accountant, very senior chartered accountant, where we are discussing, he said, okay, listen, for TDS, how do you check whether TDS is actually deducted or not on expenditure? You are not checking each expense. You cannot go and see whether that party is dealing with the individual, whether he is dealing with a company, is TDS deducted under 194C at 2% or 1%. All these you are not seeing. So how do you do it? You take the broad expenses. You think, okay, fine. This is a nature of 194C. If they have deducted the tax, approximately 2 to 1%, they would have deducted it. So you put an average calculation, then you see how much they deducted. Materiality, you will see, okay, more or less it complies with, okay, I am happy, satisfied. So therefore, I am not going to report it, or I will not probe further. So why not we use that same logic here? The challenge when it comes to this specific thing under records is it is not as simple as 1% versus 2% in 194C. It's much more complex than that, because you have to see whether that is registered, whether that other party is in the nature of a composite dealer, whether that other party is doing on issue. How many person who is subject to tax audit have 1 to 2 crores? They will have more than hundreds to 200s of such parties will be supplying. Expenditure on a day-to-day basis runs into several crores. So it may not be practically possible at all to get this information. So therefore, there is a difficulty over here, which is why we'll be coming to the disclaimer soon. Column number 6 is just a total of your registered supplies. And finally, we come to column number 7, expenditure incurred on your unregistered dealers, column number 7. Any expenses you have incurred which pertain to parties who are unregistered have to be captured here. But here, please note, this is what the ICAI guidance note specifically states, is that we must ensure that column number 6, which is your total of your expenditure incurred towards registered dealers, plus column number 7, total expenses to unregistered dealers, must tally with column number 2, which is your total expenditure you are capturing under this clause 44. So column number 2 must be equal to 6 plus 7. So either you work backwards based on what information you have, and then you fill column number 2, or you work forward and you put a balancing figure in one of the two places, either other registered entities or unregistered entities. Which one you are going to do, you must take a professional call, or what is even better, get a statement from the management. And this is where the industry folks have to step in, which is as advised by our institute also in the guidance note. There is a specific format which is prescribed over here, which is you must get a management representation letter in this format. You can fill it and give it to them and they can give the letter, whichever. But this letter has to be given by the management saying these are the expenses we have incurred. These are the details that we are furnishing before you. If assuming this table also, they don't have the information, expenditure head, name of the payment, nature, GSTI, and all these details, sometime they may not have the detailed breakup. At least in the clause 44 format, you get a letter from them. And based on that, you can fill it. So this is the least bit that we must do from our end as chartered accountants, is that we must get the letter from the management. Because if the management cannot get this GST details, then for sure as auditors, we can never get the GST details, because they are the persons who deal with it day to day. And we are doing on a sample basis. Your audit is not a 100% audit, it's done on a test check basis, or at least in an ideal scenario. So therefore, if on a management who is dealing with 100% cannot give the details, then definitely on a test check basis, you cannot give the details at all. So these are some of the common challenges that we are facing. And if there are other challenges, you can definitely voice it and we can include it here. But bifurcation of the details between registered and unregistered is not maintained. ITC details, sometimes they are not claiming. Many businesses, in fact, one of the associates that I was speaking to most recently last week, that was the biggest challenge we had, because his expenses in the books were so high. And this is an individual professional. His expenses were so high, but input, nothing he has claimed. Absolutely nothing in his input tax. And I got worried, okay, what is the issue in clause 44? What will happen? Where do I put it? Unregistered, registered? You are not claiming input at all. What is it? How, whether it will affect? So this is when we did that research and we said, okay, fine. As far as income tax is concerned, you will not have any problem. As far as GST is concerned, I wonder whether they will come and say, why you have not taken input? I don't think any government will come and say that, please take input. We are encouraging you. All that will never happen. If you're taking extra only, they will come and ask you. So if somebody is not claiming input credit, I don't think you'll have a problem. But that is one issue that we face, because we are thinking reconciliation between your total expenditure as per income tax versus your ITC claim. Will that happen? And if it does, what is the implication? Of course, you will have the documentation to prove the nature of the expenses, but justification that input tax must be claimed may be an issue in the future. So I think that's something I think the government may introduce it in the future. I think that is in the long run pipeline, where they will say, unless input tax credit is claimed, if it is a taxable supply in the nature of that, then only you can claim it in income tax. If they bring that, then definitely the Pandora box will be opened. And that is when we'll really see if all the expenses is being captured. Next, of course, among the registered person, bifurcating between regular and unregistered or composite, etc., is a very big challenge. RCM basis, recording of the same, many people are not capturing it. So how we're going to capture it is a big issue. And of course, finally, the accounts have to be maintained like that. And that is when one of my staff gave me a tip. And for people who are using Tally, other softwares, there may be better methods, because majority of the associates are maintaining on Tally. I thought I will share this tip because it was very, very interesting. The thing is, one of the associates we are working with, their accountant quit midway. So I think around April or May, that accountant left the job. So they got a new accountant only last month, and he is not familiar with the transactions that was executed before. But luckily, the older accountant was a very good person. So he was keeping good record of the books, etc. So what happened is, he has captured the GST records in Tally itself. So if your assessee happens to have captured the GST records, there's a good chance that you can fill up this clause 44 with the records in Tally itself. You need not go beyond it also. Of course, still get a management letter, but you can get it from Tally itself. So this is one way of doing it. The first thing you must do in your Tally, go to whichever is the nature of the expense you have. So let's assume I have on my screen the purchase ledger for this person. So you take the purchase ledger. And once you take the purchase ledger, on the right hand side, as you can see, there's something called columnar format. You click on that columnar format, you will be led to a table like this, which will show you how you want details in the columnar format. The specific thing that you need to fill, as you can see over here, and I've specifically highlighted the box over there, to show party GSTIN/UIN. Please fill yes over there. Once you fill yes, you will extract the data like this. So this is the sheet that you will get once you extract it for each head. So this is for purchases. So under purchases, these are the list of expenditure they have with the GST number. Now this GSTN number must have been input by the company when they are accountant when he is filling it. If he has not filled it, then you will not get this detail. But by luck or by chance, if your accountant has filled this, then it's extremely useful where you can calculate and see what is the total purchases. So once you export this to Excel, it is very easy. You just put a filter formula and you take what is the GST number, whatever is there, that is with your supply, registered suppliers, other is your unregistered or whatever is, persons you don't have the specific details, composite, non-composite, all that. So you can fill based on this. It is little cumbersome in the sense for each head of income or each head of expense, you must do it. So purchases, each expenses, telephone, your salaries or all, whatever is taxable under GST, those specific heads of expense, you must ensure that these details are captured. Only then you can fill it. But it's very easy to fill if they have recorded the GST number. Just export to Excel, put a filter formula, and you can get these details. So it's very easy to tabulate. Hopefully they have maintained it. Now, another very, very important question is following the guidance note mandatory? So our institute guidance note is there, and guidance note, I told you certain excerpts when it comes to your clause 44. So the question comes, as I told you, clause 44 in the guidance note, they are not talking about anything about applicability, whether it's applicable this year, not applicable. They have not said anything. So does that make it applicable by itself? So since guidance note has said this, do I have to mandatorily follow it? Please note, guidance note is optional. It is only giving you a direction. They are not telling you that you must do this. If you don't do this, it will be a problem. Of course, it is always better to follow our mother institute's guidance note because with the experts, they have come out with this guidance note. So it is always better to follow it. But please note, it is not mandatory. You can take a professional decision using your own discretion that whether you want to report a certain aspect or not. And that brings me finally, before we go to disclaimers, what are the important things that you need to do when it comes to this? First thing, most important thing, whether the details are perfect or not, whether they are maintaining or not, whether you have checked or sample checked or 100% checked or not, please ensure you get this letter from the management. Get it either in this format. This format is prescribed by the ICA. This is from the guidance note. Either you get it in this format. If they are maintaining this, excellent. If you are struggling with this, at least in the clause 44 format, whatever is the format of clause 44, get it in that format from their letterhead, get it signed by the director or proprietor or whoever is the person who's in charge of reporting it, and ensure that you capture these details. The next important thing, do a test check, a sampling regarding specifically to GST. Of course, in course of your audit, you're going to be doing a test check or 100% check on the expenses. That's not an issue at all. But you need to maintain some sort of working papers that you have done a test check pertaining to this GST aspect as well. So whenever you are doing your test check for your expenses, you are maintaining either working papers by hand or on Excel. Ensure you have one column for GST, where you are capturing the nature of the GST, who the party is from, whether they have a GSTN number on the invoice. All these details, if you capture, at least you would have done a test check, which means as an auditor, I have satisfied the minimum requirements required as per the standards of auditing issued by the ICA. So at least I am compliant with the ICA. Materiality ensured. I have checked, the test checking is done on sample basis. So therefore I have the comfort. So you can go by that also. At least ensure that you have that on record. Third, consolidated expense. Please note, you cannot give a breakup of each entity because clause 44, the tax audit report is for a consolidated entity. If somebody is doing multiple businesses or they have multiple GST and numbers, you are doing based on PAN number basis only. So you have only one tax audit report. So if they have 10 or 12 or 50 also GST numbers, you have to consolidate it and put it over here. Maybe cumbersome, but that is the requirement. Mention in the comments that expenditure includes capital and revenue also. So this is for just the disclosure purpose, because nobody anywhere is coming and saying expenditure means capital, expenditure means revenue. Nobody says so. We have to assume. So we are assuming because it's required for GST purpose, it will include capital also. So please ensure that you are capturing this accordingly. Suppose you have reported revenue. Let us assume you don't have the capital, you have not captured, you have gone as per P&L only. Then also it is okay. You just ensure that you are capturing that and you are stating that only revenue you have checked. So that even if you do that, it's perfectly fine. And of course, the most important thing, even after all your efforts, if you are unable to get the information, go for a disclaimer or go for a comments saying the following. That brings me to the most important thing, which is so what had a very detailed discussion with me where he was encouraging me, Abhishek, we have to focus on the disclaimers, we have to focus on the disclosures, because this is what is really going to either save our chartered accountants or they will struggle with. So I appreciate him for encouraging me. So I spent a lot of time asking this, and I'll be handing over to the speakers shortly. Sorry, I'm overshooting my time. But I thought having this disclosure and maybe few other disclosures, not only relating to clause 44, but some important points, I thought I'll cover here. The first one, when it comes to your clause 44, is suppose you have verified. Let us assume you have got all the details, you have done the verification, then you can make a disclosure saying the following. And I will circulate this PPT. So Hari sir, you can circulate to all the audiences who have registered so that it will be helpful. If they want to copy paste also, they can do it from this. So I'll circulate this, but just for the benefit of the course of the presentation, I'll read out what I have done here. So you can say, we have verified the breakup of the expenditure incurred between the entities registered and unregistered under GST Act. And we have also done it as per the standards of auditing issued by ICAI. We have done test checks and we have checked the materiality. For the specific requirements of clause 44, reliance has been placed on the representation of the management. So please note this over here. Whether you have verified or not, we are placing the reliance on the management representation. It is very critical. So please note once again, get the management representation no matter what. Suppose you are not verified. That's the most important thing, because majority of the chartered accountants are struggling. Majority of the businesses are unable to give this detail. So what do you do in this scenario? Then ensure that you get, in the view of the voluminous nature of transaction, no reconciliation statement of the expenditure as per books and as required under clause 44 was provided by the management. Please use those words. Don't use I have not verified. Please do not say that they have not maintained. Just to say the reconciliation between the two are not provided. This is the safest wording you can give without saying they have not maintained, without saying that we have not verified. So that way you are protecting them also, you are protecting yourself also. So what you are saying is they have not given a reconciliation statement. And because of that, we have placed on the reliance what they have given, just a management statement. Based on that, we have filed it. So this is the most democratic wording that I can find on this particular aspect. Suppose you are more daring and you are someone who's willing to, you want to give more specific information, means then you can use what I have put over here, which means certain specific columns you have verified. So you can make a reference to that saying this has been verified. I have not verified the composite dealers because that is specifically not maintained separately. All that you can give. So this slide, which you see on the screen, is for daring people who are saying, I verified, I want to report very pakka manner, very specific manner. You can use what I put on the screen over here. But in general, 95%, please use this table that you are seeing on the first slide that I put. Now it's on the screen. You can use this. This is the safest way of reporting so that no party suffers. Should I cover this or should I hand over the session? Because I've got a few more disclaimers which are important in other clauses. This is not necessarily clause 44. Should I do this now or maybe I'll hand over the session?
Abhishek, please go ahead. Please go ahead.
Okay, I'll just take 5 minutes, Sudhir ji. So I apologize for eating into your time.
GST point of view, I don't require much time. So please take your time, another 10-15 minutes, no issues.
Okay. Thank you, Sudhir ji. So here I just thought, even though it's a clause 44 session, everyone is right now.
Yeah, If you go by clause 30 also, there is a requirement of reporting of all the GST expenditures in before that. And one more, you talked about the things that SENVAT and GST for exempted, etc. There is another clause which asks for our availability, utilization, and other also.
Yep.
So, but definitely your disclaimers are very much. Thank you very much for that. Please continue. Yeah. Fine.
Thank you, sir. Yes, sir. So I think the disclaimers will more or less cover those clauses also. So it is deliberately, it is very democratically worded so that you can use it. You can reference which are the clauses you want it to cover specifically and ensure that you do the same. So now coming to certain other specific things, other disclaimers, because a lot of calls once again are coming in because this is everyone is finishing their tax audits now or in the process of trying to close it out. So these are certain important points you must do. The first one, a general disclaimer, which our institute has requested people to do now, is ensure that you bring out what is the responsibility of the management and what is the responsibility of the auditor. So the first clause saying the accompanying statements, annexures are responsibility of the management. Our responsibility is to express an opinion on the relevant clauses. This is a very, very important clause. So you have to put it either in comment in clause number 3, I think, if it is 3CB, or 3CA means in clause number 5 of your 3CA or 3CB, ensure you put this. And of course, ensure you mention that we have considered materiality also. When it comes to books of accounts, important point is for professionals, it is mandated by law. There's a rule 6F, which mandates what are the books to be maintained by professionals. But when it comes to companies or other businesses, nowhere it says what books are to be maintained. So generally we will put whatever cash book has been verified, ledgers, general ledgers have been verified, all this we will put. So when you're putting that, it is based on what we have seen. If you want to be safe, I would suggest you please note that no specific books have been required to be maintained by the Act. Not only this Act, if you take even Companies Act, nowhere it says what books are to be maintained when it comes to non-professional businesses. So therefore, you mentioned this clause for adequate precaution. ICDS in my view is one of the worst things that has happened in Income Tax Act. I don't know why they brought it. They brought 9 ICDS, then they also got tired. They stopped releasing more. Hopefully they will repeal the existing ones because I don't understand why they brought it at all. It's more complex. It is complicating things and unnecessary additions are coming in notices. The kind of additions which are happening, it is very clear to me. Assessing officers also don't understand ICDS. They also don't know why it is there. So additions are happening where increase in loss, increase in profit, difference if you net it, it is 0. Whatever is increase in profit, they are adding, increase in loss, they are ignoring and they're doing it. All kinds of things, exclusive method, inclusive method, unnecessary changes. So ICDS, I brought certain disclosures which you can use. I'm sure this will be helpful. You can just copy paste this. I'm not reading it because it is too long. PFESI, I think Hari sir specifically wanted me to deal with this. The reason being, you're all familiar that employees' contribution was a disputable issue for the last X number of years, where we took a stand that it must be allowed. Department took a stand it should not. Case went up to Supreme Court. Supreme Court held in favor of the assessee, saying it is impractical. Both employer and employee contribution, same time only you are doing. How you can come and say that employer means you have to do it up to 31st, up to due date of filing you have. Employee means that day itself you must do it. It's not possible for you to remit also. Practically even today, you cannot remit employee share. You will not say today you remit employee share. Employer share after 6 months you do it. It's not possible for you to do it also. It has to be done at the same time. So therefore, various courts, including the Supreme Court, held in the favor of assessee. 2 years back, our Honorable Finance Minister in the budget, unfortunately said that the law is clear, that you must not allow. So going forward, you must not allow it at all, is what they have said. So till now, till at least last year, everyone used to still claim it. Employee contribution, even though it was delayed, people used to claim it. Please note, now the Act is clear. There are no questions to be asked. So PFESI, you must bring out any delay, whether employer or employee, ensure that you bring it out and you disclose it accordingly. And disallowance must also be made. There is no option now. There is no option now. So this is what the Act, this is the disclosure you can use for that. Of course, TDS remittances, I told you example, you do a sample basis of what TDS is to be done. In some entities, maybe you can check 100%. If it is a very large entity, it's impossible for you to ensure TDS compliance is done perfectly. So ensure you get, once again, you put a point saying we have relied on the representation of the management to get comfort on the TDS remittances and TDS returns being filed. Cash payments in excess of 10,000. The simple answer to this, you can take the cash ledger You can check what transactions is more than 10,000 and you can disallow under 48.3. But really speaking, you cannot individually check certain transactions. They may break up. That's Tally is notorious for that. You can go backdate and change entries also. So even if they have paid a single person 1 lakh rupees in cash, they can break it into 12 transactions of less than 10,000 and then say it is multiple transactions, multiple parties. So it's not practically possible for you to check it. If you want to be safe, better you just put this disclosure saying it is not possible for us to verify the payments because the details are not specifically maintained. So therefore, we are gone again by the management representation on the same, and we have verified the cash ledger. And on that basis, we have made the disclosures. MSME dues, once again, one very, very confusing requirement in my view, because how you are going to identify what is MSME, what is not MSME? You ask your client, he himself does not know. Sir, is this MSME? I don't know, sir. So how can you possibly make a disclosure whether all the dues to MSME have been cleared within time? It's not possible. So better you make this disclosure and get safety, saying assessee itself doesn't know how I am going to know. So that is effectively what I have put, but in a nicer way, I have written it over here in the disclosures. So you can consider that and disclose that. Related party transactions, if it is a proprietor partner, easy for you to do because relatives may be minimum in number. If it is a company with 10 directors, 12 directors, 7 key management personnel, how many relatives you are going to see? You may not know who. They may have the same relative, they may have extended family. It's impossible for you to verify those details. Once again, go by management representation letter. Beyond a certain size, impossible to verify related parties. Get a MRL, ensure that those persons are not there, get the comfort. 269 SS, 269T, once again, it's a provision. If you go by Tally, you can ensure that they are complying with it. Just take out the ledger, see the movement, see what is cash, what is non-cash, and you can fill it. But realistically speaking, you don't know if they've broken up the transactions or whether single transaction. So better you just say we have verified what is beyond that limit and we have disclosed it. But it is not possible for us to verify if the cash transactions have been done within 20,000 or not. Same thing, 269 ST, cash transaction in excess of 2 lakh, single event, single occasion. They are all very, very complex wordings is there in that. Impossible to comply, get a disclosure. And finally, the most important thing is many people say that the industry pushes back. If I say that this has to be disallowed, they will tell that no, don't disallow. You make addition. There is some decision is there. One tribunal decision is there in Mizoram. I want to rely on that. So we all know it is not possible to apply jurisdiction wise. It is not possible. But suppose they are pushing heavily. What do you want to do? You can make a disclosure saying that disallowance has not been made because the company is particularly placing reliance on X decision or Y decision. So on that basis, we have accepted this particular point. So you can make that disclosure. And I think that covers all the major disclosures and the discussions on clause 44, whatever little I know. I'm sure GST expert Sudhirji will be able to take us through the more important aspects as well. Thank you very much for inviting me and giving me this opportunity to be here. Thank you to the organizers and back to them.
Sir, we request you that after our Sudhir sir presentation is over, we'll take all the questions which will come in the chat or through one by one also, so that to the satisfaction of them, we have enough time and the issues are limited. And you have a very categorically given what should be short-term disclaimer, disclosure, and if you are there enough, you can go for it. So over to Sudhir sir.
In the presentation.
He can unmute. And unmute it.
Sir, you are able to see the full screen, sir, single slide?
Yeah.
Yes.
Yes, sir.
Thank you, sir. Good evening, all. I think it was a very wonderful, lucid presentation by Murli as usual. Nothing less was expected by Murli. So always it's what you call it's energizing to listen to my fellow speaker Murli. So I am now taking you through the Murli has covered most of the point. I think I hardly have any point of disagreement with whatever he has been told. So otherwise I would have started with few points where a different thought process would be there, but nothing has been there. So now I'll take you through few aspects which will come as far as from a GST interpretation point of view. So this is the table which has been there, which Murli has explained. Sorry, I'm referring to as Murli. So sorry, Abhishek. So Abhishek Murli has explained to us. So this is the total expenditure which is incurred for the year is what has been asked in column number 2, and then there is a subset which if I could look into this, the total expenditure which has been there and the expenditure which is there in terms of the entities which have been registered. One is the and which are expenditure which is related to entities which are not registered. So both are there, and also the exempted entities are there. So various things which has been there coming here, we need to look at. One is the exempted service. What is exempted service? We may have to understand. What is composition? Who is eligible? Who is not eligible? What exactly how to find out is something we need to understand. And what are the other registered entities, and maybe the total of that is been looked at here. So let me take you through certain definitions as far as the GST is concerned. First, to understand the exempted supply has been very clearly given. So exempted supplies has actually three portions of it. One, it says that it is covering all the goods which is subjected to nil rate of tax. That is, the notification itself gives a nil rate of tax. And the other one is that it is being taxable at a particular rate. It could be 18, 12 or whatever it is, that rate. However, in the public interest to do so, there would be a exemption notification which has been given, which could be a partial exemption, or it could be a full exemption, and it could be a conditional exemption or an unconditional exemption. So everything which will cover under section 11 is supposed to be an exempted supply. And it also includes a non-taxable supply. So one is that it should be nil rate, specifically exempted under the notification, and third one is a non-taxable supply. So these are the three things which been there. So now non-taxable supply is also been defined, where it says that it means a supply of a goods or service which is not leviable to tax under this act. That means there is a supply, but it has not been leviable to tax under this particular act, or CGST or the IGST act which has been there. So important is that it has to be a supply first. By why it has not been levied? It has been not levied because the conditions of the levy has not been satisfied. Maybe it is not for a consideration, then it will become a non-levied, or specifically something has been kept out of the tax net, like the alcoholic liquor for human consumption has been specifically kept out of the levy. So this becomes a non-taxable supply. And for deferment has been made for 5 fuels. This has also been covered under the non-taxable supply. So in sum and substance, in your expenditure, if you have a fuel expenditure also, that would be coming under the exempted supplies only. So that also needs to be reported in the field which has been given under 44. The important issues or questions which will commonly come up, which is coming up from a GST point of view, also from a compliance point of view, especially when it comes to there is something which is called as a section 44, where you have to reverse rule 44, where you have to reverse your input tax credit in proportion to taxable and exempted supply. The common question comes is that what will happen to there is few items which is non-supply. So that means it is not subjected to tax because it is deemed to be neither supply of goods nor supply of service under Schedule 3 of the GST Act. So people who are not very conversant with the GST Act, so Schedule 3 specifically provides to a CGST Act that any items which is covered under Schedule 3, no taxes to be payable, because I don't consider this either supply of goods or supply of service. When it is not a supply at all, whether it can be a non-taxable supply. As we saw in the previous definition, a non-taxable supply means a supply which is not leviable. So there has to be a supply. Schedule 3 tells that these items is not a supply at all of goods or service. So it cannot be a non-taxable supply. So thereby this need not be considered as an exempted supply for the purpose of GST and also for the purpose of filling of the form under clause 44 of 3CD under income tax, that is also should not be considered. So what are the regular items which comes under schedule 3 I have listed here? Most commonly is a supply of land or a building. So if you have purchased a land or a building, Abhishek also made it very, very clear saying that the expenditure should not be restricted only to revenue expenditure. It has to be restricted. It has to be covered to all expenditure, including the capital expenditure. So a land which you are buying is also a capital expenditure which is getting capitalized. So this is also subjected to be reported. However, it will not be coming under the exempted supply because it is not a supply at all. It will not be coming by a composition dealer. It will not be coming by a person who is registered, unless until I am assuming the seller would not have been registered. But if a seller is a real estate developer, he is registered, he is also selling a land, then it has to be incorporated by supplies from any other registered person. And of course, it comes into a total. So this is something which is, as far as a land and building, you have to be clear. So you have to look at if the supplying of land or building is happening by a registered vendor, you could still have to take it into that one particular column. But if it is not a registered at all, then I think it will get out. There is 1 minute. Sorry, it will come under column 7, expenditure relating to entities not registered under GST. It will come under column 7. I'm sorry, that is, I got confused with that. So column 7 is what something where you are, if you are not, the developer is not registered, it should come under column 7. If he is registered, but not claiming it as an exemption, it should come from any other registered source. Then there is another thing which is called as a drop shipment. That is where that I am going to buy a goods from say Singapore and selling it to Dubai. The goods will never come to India. This has also been covered under schedule 3 item. So that should also be something which you have to consider as not an exempted supply. Court fee, not an exempted supply. Salaries which has been paid, any service provided by an employee to employer is considered neither supply of goods nor supply of service. So thereby this is also not considered as an exempted supply, but it has to be it has to be an expenditure which has been there, which is from an unregistered source that could come, but not under here. Your funeral and burial services also is covered under this schedule 3. Neither supply of goods nor supply of services. So then other thing which is coming as far as after the schedule 3 is concerned is that what is going to happen to donations. I have paid various donation, whether donation is a expenditure. So whether it is a CSR funds, non-CSR funds, whether it's a part of ATG deduction, not ATG deduction, what is the donation where there is no supply at all which has been involved. So it is only a gratuity payment with gratuitous payment which has been given. So if it has to be treated as an expenditure, there is no supply underlying it in it. So that is also something which you cannot consider it as a exempted supply. Then comes is your liquidated damages. Recently, there was a circular where they made it very clear that liquidated damages is in the nature of compensation and not a supply, and thereby no GST to be paid. If it is not a supply, then it cannot be a exempted supply. Same is with the return offs and bad debts. I think Abhishek also covered on this bad debts that it need not be reportable, but because it is not a supply, no supply has been made there, that is the expenditure, it cannot be a exempted supply when the supply itself is not there. Then another interesting thing which comes up is that the advance paid and forfeited. So here what has happened is that I have given a particular vendor a particular advance, and for some reason I terminated this contract, and I told that I don't want to take this particular goods or service from you, which I had thought of taking with you. And the supplier says, then I'm not going to give you back the advances and I'm going to forfeit it. Now I'm taking this as an expenditure. So this is an expenditure, maybe allowable under income tax. However, if you look at from a GST point of view, there is no underlying supply for this particular transaction which has been given. So thereby it cannot be called as an exempted supply or a non-GST supply. Although the GST has been suffered on this, because on the advance the GST has to be paid, the vendor has paid GST. I'm assuming it's a service advance, then the GST would have been paid. If it's a goods advance, the GST would not have been paid. So all those things would be immaterial because there is no underlying supply. That is something which you have to consider here. Then comes is the remuneration and interest paid to the partners. So this is only an appropriate of expenditure. So this also appears that no reporting of this is required as far as the as far as the exempted supply is concerned. These are the things which I wanted to cover. Next comes is the composition supply. So composition dealer, most of you would be aware that service provider, even a manufacturer and a trader, based on the various limits which has been given, which is 1.5 crores and 50 lakh rupees for the service provider, may opt to pay the tax at a composition scheme without input tax credit, without being a regular. So he is also a registered supply. So the third column which comes is that anything other than the registered supply has been taken. So that anything other than the registered supply is I'll come to it, but this is something which is a composition supply which has been taken. So now the composition dealer would be a registered dealer, but he is not supposed to charge GST. He cannot make an interstate supply. So all my interstate purchases cannot be treated, it cannot be a composition dealer, although he is not being charged. He can only issue a bill of supply, and more importantly, there has to be a specific disclosure which has to be written that the invoice has been issued, or the bill of supply has been issued as a composition person and not eligible for collecting the tax on supplies. So this is something which will make you to identify that if you are buying from a composition dealer. Of course, as Abhishek was telling, it's unless until we had captured at the beginning of the year the entire vendor, making it into a vendor master and capturing under these various heads which was required for the reporting purpose. If we have not done this sort of capturing in the books of accounts, then it will become very difficult for us to identify and take up this particular reporting as of now. So there are some other items which is coming up, is that provisions which has been provided for an audit fees, or the power, or your AMCs, or your insurance, prepaid insurance, the provision which has been provided. So all those things is an expenditure for the purpose of your Income Tax Act, and thereby whether this needs to be considered for filling up this table. Answer would be this has to be considered in my view. Then comes is what happens to the import of goods or service that has to be treated as a unregistered purchase sources. Power and electricity is specifically exempted by a notification, to take it into a notification. Interest on bank loan or unsecured loan also is specifically exempted by way of notification. You need to take into it. The another typical challenge which is coming up, this question has come up to me both under clause 44. There are a lot of people asking me under clause 44, and also from annual information report or the 26 AS point of view, is that the expenditure incurred where I have paid it in form of a non-monetary consideration. So the very classic example is that joint development agreement, where there is an invoice which should be issued by the developer to landowner in exchange of a development rights what the landowner gives to me. So there is a requirement of issuing an invoice by the developer to landowner, landowner to developer. But both these things, the monetary value is not there, only the tax is being getting invoiced. So now when this is an expenditure which is not booked in my books of accounts, as a developer, I have taken a development right from my landowner who has charged me an invoice. It is reflecting in this 26 AS, whatever the thing which has been there, or when I am giving it is reflected in my 26 AS. How will I consider and do a reconciliation here has to be looked at. So I've been always been telling, as far as the supplies which has been considered, the supplies has to be looked at from a GST point of view, not from your income tax point of view. So as per me, if it is not a book expenditure, it is not a claimable expenditure in your income tax. If it has not been shown, the requirement, although this invoice has been issued, it is available in the GST records. This disclosure in the clause 44 is not required, is my view. I think Abhishek may add if he has a different view on this, but this is something which is which will come up over a period of time, because after all the reconciliation, these are the items which will be left, and a lot of things will start coming up there. So there are other few questions which is regularly coming up, is that whether to be looked at the entire exemption, whether it has to be looked at from a supplier end or from a recipient end. So this is a very, very common thing which happens, is that as a recipient, I feel that this supply is exempted under a notification, and I am saying that it should be exempted, but the supplier is telling that it is to be taxable. It could be a disputed, or it could be a classification which we are doing both on a different way. So now when I'm looking at an exemption, should I redo the entire assessment in my hands of the vendor? That means, should I go back and consider whether it is a nil rate, whether it is exempted by a notification, whether it is a non-taxable supply? Should I do this re-quantification or reassessment independently and come and reporting it my clause 44, or I will blindly follow what the supplier has been done? So as far as the GST or the central excise is concerned, they have made it very clear that the classification or the exemption can be claimed only by the supplier and not by the recipient. So redoing anything from the recipient is not valid. See, assessment has been done by the supplier. So I feel that clause 44 has to be reported how the supplier has made this in his assessment, how he is treating it, without actually digging into it whether that is right or wrong. Very important, we need to understand from clause 44 is only a disclosure and an information purpose. So this is not a compliance which I need to do from a GST Act or an Income Tax Act, but only to give a certain information which will help the department to have some quantification. So now what is the reason for getting this? Mr. Hari also at the beginning was telling that it is not clear why exactly they wanted this detail. Maybe my view, what I have looked at, not that I have spoken to anybody or I have a material for it, but my view, my guess is that all the assessments, all the information which has been there with the department as of now is all from the supplier point of view. Is GSTR1 returns, and is GSTR 3B returns, is annual returns, is GSTR 9C returns. So everything is from a supplier point of view and nothing is coming from a recipient point of view. So now what they are trying to do is that when I am making from an assessment from a supplier point of view, is it the same as recorded in the recipient point of view, or there is any difference between these two? I think maybe they want to take a gross comparative of the figures which is reported from a supplier point of view and all the recipient point of view and just compare it whether it has been matching. Maybe, I'm not very sure. They are trying to take the same data from different sources. So that is the reason what I feel is that you have to go as is been assessed by the supplier rather than doing a reassessment and giving a new figure. So that is something which I think we need to be looked at. In many cases, there is a disputed cases. I am disputing with my vendor saying that it is exempted. I am very clear, and there is a long pending invoices. Invoice has been raised by my vendor charging GST, but I'm not giving him GST. I'm only giving 100 rupees and saying that 18 rupees is not liable. It is exempted, and we are disputing it. Now, because Sudhir, you told me that you assess was how assessed by the supplier, and now if I'm putting in my GST income tax returns, clause 44, 3CD for the purpose of income tax, if I am treating this as taxable because the supplier has been done, but I am telling that it is an exempted, whether this goes wrong. So this could be a challenge which has been there. But however, as Abhishek told it very clearly, that I need not give this data vendor wise. I need not give this data even on expenses wise. A summary, total summary is been sufficient. So thereby the vendor will not be able to take a call or take a ground saying that, no, see, for the purpose of 44, you treated it as taxable. So why are you telling it is exempted? You have, because you have treated it as taxable, you have to pay me. So that sort of a ground for taking him, he may not get a sufficient material. But that is something which goes contradictory. You have to be very clear when these sort of a disputed cases, how exactly you need to handle to take one particular stand. Next comes is the registered entity which is registered, but GST has not been charged. So now he is a registered entity. GST is not charged. It is also not exempted by way of notification. But why is he not charged GST? I don't know, vendor has not charged and I'm not going anything to do with this. If this sort of a thing is there, how will I look at? I will still treat this as non-exempted. I will treat it as any other registered sources and I'm going to take it there. Next is the supplies which has been received from the who is only registered for the purpose of TDS, CCS or a input service distributor. So how am I going to treat this when even if it is coming from these registered, whether I can treat it as received from a registered sources. So what is this I'm talking about to give clarity? Me as a government, I have to register only for the purpose of doing TDS. I am not providing my any output supply which has been there, which is subjected to tax. Now, when I am collecting a particular fees or a levy or something which has been there, and I have been registered for the purpose of only for the purpose of TDS, whether my registration, whatever I have been given, should that be treated as an exempted or any other registered source, or to be treated as an unregistered source. So this is something which is critical. Same happens with an ISD registered. I have registered in a particular location only for an input tax distributor and not as a supplier of service. So something has been supplied from a registration which is not been registered, but my other registration has been registered. So how am I going to treat this will be a challenge, whether I'm going to treat this as a registered, because entity as an entity I have a registration, but from location where I'm supplying from an unregistered. So should I take it into a registered or it is to be taken as a unregistered? So these are the confusions which has been there. One particular stand may have to be taken that since you have taken a registration and as far as the income tax is concerned, income tax will not be differentiating two entities to be a different person. So thereby you have to take one particular stand there and one entity stand, and if that entity is registered, you could go ahead and register report it under the registered is what I feel. Second is that there could be a registered person who is exempted, so it will come under the exempted, but if there will be unregistered under exempted, that will also come under exempted. So what will be coming under registered is the total which is other than what is been exempted, only that you can put, otherwise your total is going to increase. If you are reporting the same thing in the two different columns, it is going to increase. So that is something which you could look at. Then there is another thing which has been commonly asked is that Sudhir, at the beginning of the year, this fellow was under composition, then he increased the turnover of composition and he has come into a regular. So when he has come into a regular, how will I treat the disclosure of this person? So simple, till when he was under composition or till when he was exempted or taxable, report it accordingly. And later, once he has been coming to a regular or he has been taxable or exempted, vice versa, you split this particular vendor into two different tax period or two different reporting period and report it accordingly. So that is something which may have to be looked at. Next is can it be restricted under GSTR 2A? Can I restrict it, the entire data only as per my 2A returns? Here answer is that it talks about all the expenditure. If your 2A is not having all the expenditure, you cannot restrict. But 2A can be a guiding force for you to take a lot of data on an annual basis from a registered source, from an exempted source. That is something which you are going to get. And the balance you can play around to identify what is a composition, and then balance could be as unregistered. This is something which you could look at as a thumb rule basis. But in many cases, he is a registered person. I have not given him a registration details like a telephone, BSNL. I have not registered my GSTN number with the BSNL. BSNL is registered, but it's not in my 2A. I cannot treat BSNL as an unregistered. So 2A can be a data which will give you a lot of data available, but still you may have to do a lot of further investigations on that. So this is something which you have to look at. And vice versa, with respect to GST and income tax, there could be a different. For the purpose of GST, stock transfer is also a supply and expenditure and the recipient end. But when it is coming to the income tax assessment is concerned, entire all India basis, SSC is treated as one. So thereby the stock transfer which has been taken by one entity to other entity need not be treated as an expenditure. So that is also something which requires you to consider. So Next is that always that my GST returns has been designed. If you have to have a comparative from the income tax point of view, one is that my GSTR 3B returns requires me to give exempted nil rate and non-GST inward. So exempted and nil rate has been covered both under exempt, and non-GST inward supply, that is the non-GST. All three are coming under the definition of the exempted supplies. So that composition supply and non-GST supply needs to be reported here on the in the table number 5 of the GSTR 3B. That is both for intrastate and interstate has to be bifurcated. So this could be one of the source for picking or verifying of what the data is all about, data which has been given to an auditor or to be given to an auditor. This could be one of the source. And as far as the GSTR 9 is concerned, it also talks about supply received from composition taxpayers to be separately reported on an annual basis. So this data is also something which is supposed to be required. So this is where Mr. Abhishek was making a comment saying that if there is a disclosure which has been given that I don't have this detail, it could be totally fine from an income tax point of view to tell, because the income tax department cannot penalize you because they have not defined in the act that this is the record which you need to keep or you need to assess. But if you look at from a GST standpoint of view, if I say that I am not having that, then how are you not complying with this serial number 5 or 9, serial number 16 of GSTR 9? That becomes challenging. And most of this is again from a reporting standpoint of view, but it has not been specifically coming out in an act or a rule that you need to maintain it separately. So even if you are not doing it for this purpose for the GST, a general penalty of 25,000 plus 25,000 would be applicable, but it cannot be a huge penalty or a huge consequences which is there from a GST point of view. Again, this is GSTR 9C where you are supposed to give your headwise details into the amount of ITC availed and amount of ITC is amount of eligible ITC availed and what is the total ITC which has been available. So this is purely from an ITC point of view. And this serial number 14 is been made recommendatory even for the financial year 21-22 for which the 3CD has been looked at. This has been totally made as a recommendatory from a GST compliance point of view. So next comes is that few best practices what needs to be done by an industry. First, the industry what has to be done today is that for the past, how are you going to get the data? You are not organized how to get the data is again a different challenge altogether. You may have to look at a step-by-step procedure to take out all the purchases from a vendor point of view, classify the vendor under various components, and then you will be able to extract the data accordingly. But from henceforth, a strong accounting system or a strong recording of the systems from the expenses and the input is being required. The first and foremost thing which has been required, all the people from the industry may have to make a note of it. The first and foremost thing which is required is that routing all the expenditure only through a creditor account. So many of the cases, what we do is that from a bank directly we transfer it to a expenses, not routing through a vendor. Most of the people will be doing for a big ticket item, but when it comes to a small item, small petty purchases, they are not doing it. So the advantage is that if you are routing everything to a vendor, and as Mr. Abhishek showed from the tally that I'll be able to take out the purchase register, you give a VLOOKUP from the vendor, then you will be able to make that particular vendor a marking of a vendor that this vendor is a composition. So all the purchase value of this vendor will be under the composition scheme. So this vendor is under what you call the exempted supplies. He is only doing exempted supply. Mark everything. So that becomes very easy for you to compliance if you have a vendor-wise compliance. And very important that the Rule 56 of the CGST Act rules also talks about having a proper vendor master with his GSTN number, address, everything to be properly captured. That is something which has been required. So if you route it everything to a vendor, it is going to be very easy. And right at the month starting only, classify these under the different categories if you will be able to look at. from this classification that it is a composition dealer, supply from a composition dealer, classify it under exempted supplies received. So if this classification can be tagged at the ledger level or even at the narration level, so that you can extract it based on the narration, that could be done. So you have to look and work around in your system as to how exactly you need to mark the expenditure at the time of the voucher entry level, so that of a report you may be struggling a lot to give this time, but the next time it becomes easy for you in a click of a button to give the data to the auditor and auditor to verify the authenticity of it and put it in your 3CD report. So that is something which you may have to consider based on the accounting challenges which you are having within your organization. The other best practice is to timely do a 2B reconciliation. So this is the ITC reconciliation which has been happening. We are doing the mapping of the input tax credit taken in your books vis-a-vis 2B. At the same reconciliation, also compile and keep the data as to what are the other purchases which is happening, which is from a composition dealer, from a exempted supply. Have that entire monthly purchases, monthly expenditure, I have to put it, purchase, including capex, everything. Take that entire extract of the purchases from your day book or whatever the software you will be able to take it, map it month on month basis and compile it at an annual basis. So that gives you a very, very easy task for you to compile at an annual level. This is something which has been required. Then identification of all the expenses under different category and mark the expense itself, which I told you. Correct disclosure in GST returns is also important. As I told, in the GST returns itself is asking you a certain information. If you take it, that you'll be able to give it for the purpose of income tax purpose, that is of clause 44 purpose. That is something you could do. Track all the RCM liabilities. So RCM again is a GST paid, but it is not exempted. If you are buying it from an unregistered, you have to show it as an unregistered when you are procuring it. So that is something which you could track it and keep it. PAN level and GST level data reconciliation is something which is been required, and whatever details required in the 3CD, I told it's something which you have to look at. So any changes which has been there, whatever the gaps is there, you have to give your comments and tell to the department that this is what you understand. So that is something which is important. So this finishes my talk. Pardon? Yeah. So I think we have sufficient time left for the question answer. So we are open for the questions. I thank FTCCI for, and especially the Direct Taxes Committee for giving me an opportunity to be here and share my thoughts. Thank you all. I'm open for questions.
Friends, I have to tell you that the success of Subhash Gai, one director, is there now. He puts two stalwarts opposite to each other. And people have been thinking that what is the relevance of GST into the tax audit? Now you can understand the Sudhir has taken it to the new heights of relevance of the income tax and the GST. It is, if you do not do, that is why in the starting I said it is like a balance. You have to balance if like terazu, both the sides. So if you are missing in income tax reporting something, you are entering into a gray area of taxation or otherwise in the GST regime or taxation. So very well presented by Sudhir. We have received a few questions before that. Kindly elaborate, Sudhirji, on 2-3 aspects which you have mentioned, and then we'll take up issues. Sudhir,
yeah, please tell me, sir.
Because salary now for industries or service sector, HR, like daily laborers in construction industry, they are regular employees, but they are paid as a daily labor or a casual labor. And so what will be their status? Because salary and wages is the term. And I will say you 4 or 5 things: perks, incentives, and bonus, reimbursements to a large extent, and loading and unloading is also another part. Hamali charges. These are very driver salary also I can put in.
Okay, so, as far as salary, sir, I instead of using the word, what I have to use is that any employer-employee relationship. That is a master servant sort of a relationship which has been there. So any services which is there, it is considered as neither supply of goods nor supply of services. Because it is not a supply, it will not be an exempted supply. So it will come out of my first column. Now, if it has been taken by a registered person, it will come under the last 7. If it is not come, if it is taken from a registered source, it will come from anything other than a registered source. So my entire explanation is that you don't report it under an exempted supply as far as the salaries is concerned. Salary includes wages, it includes bonus, it includes perquisites, it includes the muster rolls. Now, a non-muster roll employee which has been there, NMR labor which we talk about, so that has been generally routed through a contractor. A contractor is there, is going to supply a non-muster roll employees, and the wages or whatever the things has been paid to him. So that will be a sort of a supply which has been provided. It will be a sort of a manpower supply. So this is something which, as far as the salary is concerned. Now coming to the reimbursement. So reimbursement is also not a supply, but it is certainly an expenditure for you. Say, for example, I have a vendor who is a chartered accountant. The chartered accountant has charged X amount for doing an ROC filing. He has also charged a Y amount, the filing fees for uploading that particular form on behalf of the company, and he is taking it a reimbursement. So that is an expenditure for me, but that expenditure is not a taxable supply for the purpose of GST. But because I'm taking it through a registered source, that is through you, now I have to look at whether it is an exempted supply or anything other than comes under the other registered source, which is not coming under the 3 columns. That is a residuary column. So there again, the challenge comes up is that supplier is not you, supplier is MCA. It has been routed through you. So there amounts to a particular complications which will come out there. So you have to look at whether you have to restrict yourself with chartered accountant, or should I restrict through should I go through the source and say that it has come through an MCA? So that is something which what you call a judgment which needs to be taken properly. So in my view, because the supplier, that is a chartered accountant, is claiming that this is not my supply, I'm only a pass through, I may have to look at MCA and do the proper disclosure. That is what I think as far as the reimbursement. Coming to Amali charges, sir, Amali charges will be again not on an employment basis. It will be a consignment to consignment. He is a sort of a supplier only, service provider. If he is unregistered, you will put it as an unregistered source.
Similarly, sir, for petrol, diesel, they are exempted. But when it comes to industry, power and fuel, wood is also there, water is there, gas is there. So, and so also, what should be the status? Because many times along with that petrol and diesel generator or whatever, power, wood, fuel, gas is also used as under the category of power and fuel.
Power is exempted under notification, sir.
Yeah, that is electricity and gas, LNG.
Electricity is exempted. Now coming to the gas, gas is also that I think covered under no, not gas. 5 fuels are covered under that non-supply, which I have discussed. 5 fuels, which is your
yeah, but the gas, natural gas only we talked about. Here, these are the cylindered gas, etc.
That is taxable. And water. Paying GST also on that. It's taxable.
So we have it is taxable.
Yeah, it is taxable.
It is taxable. So we have to report under taxable category, and if it is from the registered and unregistered, whatever it is called. And water, though, water is exempted, or where we have to take? Water is in many industries is taken for.
Packed water is taxable, sir. Raw water is exempted.
Okay. So we have to go that way. And freight and transportation, generally we go by GTA, etc. But when it comes to our own vehicle, which the industry or the trader has for transportation, recently the notification of 750 and 1500 also has been taken out, single carriage. But what about my driver's salary and because the expenses which I am giving to that driver's salary as a reimbursement for on a kilometer basis or some arrangement because and maintenance charges.
Easy on your rolls, sir.
Sir?
Easy on your rolls.
Driver will be on the rolls.
Then he is a salaried employee. So. How you are setting? Are you paying him a monthly amount or you are paying trip basis? That doesn't make much difference.
Okay. Very well, sir. So reimbursement is also if after, but petrol and diesel and other expenditures will be there. We have to take a call on that. In purchases, generally we classify all the things. But when it comes to losses, pilferage, damage, or claims, how do we have to take into account for this?
So damages and all those things, sir. From an income tax point of view, we'll again take it as a separate line item, or my purchase itself will be there as is. How I'm not very sure how it happens.
Because
say for example, I got a purchase of say 100 pence from my vendor. I had kept it in my office. I found that 30 has been full-fledged.
Yes.
Okay. So now only 70 is there. So do I do anything from an income tax or leave it like that? So I feel that
in my view, this will be something like your bad debts. It is not in the nature of supply. It may be a loss or an expenditure. It's in the nature of a loss. So in my view, it need not be shown in column 2 also, is what I feel.
Okay.
And when it comes to interest, a little clarification is being asked, because the interest to the bank, we were considering that it is exempted, but to others, unsecured loans, you mentioned that also is exempt? Interest to others on unsecured loans or whatever?
That is also exempted, sir. Even for banker and individual, any non-banking company also.
So exempt, under exempt category, it has to be reported. And when it comes to this discount and samples,
Discount as an expenditure, no, sir?
Yeah, discounts, because these days what is happening is MRPs are there. So many a time the companies are forcing for the turnover and that later on they are reimbursed for the discounts.
So as far as the discount is concerned, sir, as far as the GST is concerned, it says that even a post-sale discount is also eligible for reduction of your output value. So MRP was 100 rupees. Now I am selling it at a discount of 10 rupees. After I have sold, I have given you 10 rupees. That 10 rupees is also a reduction on your output value. That is how the law says. So from a GST point of view, discount is not an expenditure. But from an accounting parlance, 100 rupees is the turnover booked. The 10 rupees discount, post-sale discount, I may treat it as an expenditure. So as far as the discount is concerned, there is no supply which has been involved.
Very true, very true. Because it is in short term, it is told as a RD, reimbursed discounts rather. So which is offsetting in parlance. And what about the taxes and the penalties of MCS tax or profession tax or our other taxes and the penalties?
All those things are non-supply, sir.
Taxes, all we can take it as a except violation or offense. What do you say, Abhishek, sir? Because court fee only we have mentioned about the Schedule 3.
If GST is leviable, it will come. If not, I don't think it's a problem at all.
The penalties you are talking about, no?
Yeah.
Yeah, it will not come. GST is not applicable on penalties.
Because all these days now, for small regular, just late fees is again, they have termed as a fees, but it is a penalty or an offense or whatever. But as a true accountant,
there is no supply done by either GST department or an MCF for me for. There is no underlying supply at all. When there is no supply, it cannot be exempted.
In the backdrop of RCM, in many cases, what we are doing is there is no supply also, but we are billing to ourselves.
RCM, there is a supply. Advocate there is a supply of legal service. But instead of making a compliance is on me.
Yeah, self to self.
That's all.
And from one more, then I will come down to the question, sir. Entertainment, sales promotion, like because already in the clause, this tax audit report, capital expenditure, personal expenditure, all are has to be reported. Then in all these things also we mention whether section 37 also says that in relation to business. So many a times incentives, sales promotion and entertainment expenses, how do we have to take into account?
So for me, all those things are taxable supplies only, sir. It's a taxable supplies. It is not exempted. If it is through a registered source, put it in registered source. If it's through unregistered, put it in the unregistered source.
Okay, sir. So thank you, sir, very much for this. Now we have received a few questions. This is Mr. Venkat Ramababu. How to deal with the situation when an SSC is not required to be registered under section 22 and mandatorily required to be registered under section 24 of the CGST Act?
So I think he's talking about a situation where it is less than 20 lakhs, where he is not required to be registered. Second is that whenever there is a when he is taking RCM or he is doing an interstate supply through e-com, and he is registered mandatorily to be registered. So he's talking about that, but I'm not very sure from this reporting content what he wants to add. So there could be a chance that he is actually crossing 20 lakhs. He is required to be registered, but still he is unregistered. So as I told, my view is that I will not again redo what is required to be done. How he has assessed, whether he has assessed rightly or wrongly, how he is assessing, that only I am going to report as far as my for clause 44 is concerned. So I will treat him as an unregistered supplies because the supply is not exempted. His registration is exempted. I will not put it under exempted. I will put it under unregistered supplies. That's the residuary which has been there.
Yeah, and you have already mentioned that we are going from the point of view of the supplier, not from the recipient point of view. So that also
Abhishek, you agree with this view or you have a different view on this?
I think he is asking from the point of view of whether the assessee needs to comply with clause 44 is what he feels. I think he's asking. He is not crossing the limit threshold, but he is mandated by section 24 to register. So here I think, in my view, if as per section 24 compliance is required, maintenance of records, books, what Sudhirji had covered, if that is required for this assessee, then in my view clause 44 he cannot say books, these details are not maintained. So if he is mandated by section 24 registration that he has to maintain the records, maybe Sudhirji can enlighten on that aspect, then he has to comply with clause 44. There's no other option.
I agree with you. Yeah.
Swami Venkateshwar. Shall I come to the next questions?
Yeah,
Swami Venkateshwar is asking, in the case of an assessee not registered and doing business in onions, which are not liable to GST, how to report under clause 44? So we have already we have discussed that the registration of GST is not here. Tax audit limit is the criteria for reporting here. I think that is here. Again, sir, this is with respect to 40AIA is the question, which is not here applicable, but the case is that 194Q versus 206C, that is the question. I'm again has complimented to you, Abhishek ji, for your surgical strike on clause 44. Mr. Murthy. So employee to employee or otherwise. Mr. Nagen Prasad is asking, which I have asked you, no, sir, in expenses, is expenses meant only input services related to or in course of or furtherance of business, or it also includes other expenditure like establishment, bonus, promotion, conveyance, staff welfare, consultancy? Just now, I think you have clarified on that. That all they are not exempt, and registered and unregistered, we have to take a call. All those expenditure which are because expenditure means payments means expenditure is also a clarification in the guidance note that we have to not differentiate between expenditure and payments also. Here's partners remuneration. You have clarified, that was from Ashok and Mr. N. Sharma. Traveling expenses, sales promotion, and which include total expenses for which no data is captured as no input credit is available. How do we report under clause 44? Total expenses including bad debts and depreciation with respect to 10 lakhs bad debts or depreciation say 3 lakhs. So in column 2, is it will be 10 lakhs or 8 lakhs?
1 lakh.
Total expenses including bad debts and depreciation. So these are not to be included at all in column 2, no, sir?
Yeah, it will be 7. I don't know how 8 has come there. Say 3. So 10 lakhs minus your depreciation bad debts, whatever that figure. So
Yeah.
that is enough to be reported.
Yeah. So, right. Disclosure of expenditure is to be given as per books or GSTR 3B.
Books.
Sir, by chance that is not matching with your 3B, then 3B has to be rectified in terms of making good in annual returns. GSTR 9, you cannot go and do a revision of 3B. So either you include in the subsequent month up to September. If that is also you are missing, you do it in the annual returns. The disclosure, tax has to be paid, you pay. But you cannot say because I have under-assessed in 3B, I'll show less in 44.
Or when notice comes, you can go meet Sudhirji.
Yeah.
And they have to pay penalty also.
Bank charges are covered under exempted or not?
Bank charges are taxable, sir. Bank interest are exempted.
RCM expenses to be reported in which column?
Column 2, I mean, it is a registered dealer. So you will be putting it either in whichever he is covered in. So most likely it will be column 5.
Unregistered, maybe RCM could be unregistered also.
Could be unregistered, you're right. So
7 also.
yeah.
In respect of a bar and restaurant, liquor purchases which is from the government agency, right? TCS is applicable. Then how to report about the purchases of those, because it is exempted in Schedule 3, but the businesses of bar and restaurant.
So it is not exempted. In the exempted, liquor will not come. Sorry, exempted will come because it is a non-taxable supply. It will come under exempted. So if he is registered, the whatever that beverages corporation is there,
Yes.
I registered. They have also registered for GST purpose for various other compliance. So because if the beverages corporation is registered from where we are procuring the liquor, then it will be a exempted source because it's a non-taxable supply through the registered.
In a GSTR and for petrol pumps also similarly, though they are not required to be registered, but for the oils and small things, they go for registration and they may not also. But when it comes to reporting, they show only the taxable turnover versus this. Liquor here, when we are saying Schedule 3 is not exempts from reporting of these 3 items, he is asking again that what is to be reported as taxable purchases only alone, or this liquor or for petroleum petrol.
Liquor and petroleum has to be given single treatment, sir, same treatment. Okay. There is a chance that a beverage corporation is not registered for GST at all. Because we are not only looking at Telangana, I don't know about all other countries how the beverage corporation is there. So if it is not at all registered, it will straight away we'll put it under 7. Okay, so you say that expenditure relating to entities not registered under GST, you will put it there.
Because they are in the trade.
Corporation, 1 minute, sir. Beverage corporation is registered for some purpose.
Yeah.
On liquor GST
Okay.
is not. They have some commission. They are getting something else, rental. A lot of things are there. They have taken a registration for that particular purpose.
Yeah.
So then it will come under column number 3 because it is a exempted supply. Exempted supply includes the non-taxable supplies.
But
Got it?
But Schedule 3 we specifically said these are not to be reported.
No. Schedule 3 is not having these items. Schedule 3 is sale of land, employee, employer. Non-taxable supply includes a supply which is not leviable to tax. So liquor is a supply which has been kept out of the tax. 5 fuels are a supply which is deferred from levy.
Okay.
So these 2 are still a non-taxable supplies, thereby exempted supply will be part of 3 if the vendor is registered. If the vendor is not registered, say there is a petrol bunk, he is not selling lubes at all. Hypothetical situation, take it. He is only selling fuel only. then he is not required to register, he is not registered, you straight away put it under 7. But for the purpose of lubes, he has taken a registration, put it under 3.
Okay. Very, very, very. Thank you, sir. You have very categorically made it very clear that purchases has to be reported based on the vendor registration. If they are registered, it has to come under exempt supply, column 3. Otherwise, it has to come under column 7.
Exactly.
Right, sir? For both. Yeah. GTA also likewise. Lorry high charges, when they make the payment, again, it has to come under column 3, which is exempt. Now, sir, here another question is, how to report in requirement for hospitals who are not liable under GST? Hospitals. Same. Registered, unregistered. Hospital.
That is the reporting entity is hospital or a vendor is an hospital?
No, reporting entities.
Okay, if reporting entity is an hospital, it is same. Hospital would have taken GST registration for maybe it's pharmacy sales, or maybe some rental income. They have given it some food court or something. They have given it to somebody. They have taken.
Yeah.
So they would have taken registration for that purpose. But the moment, as Abhishek is telling, the moment you have taken a registration, you are supposed to require to maintain all those data, and you have to recompute everything and give. That all the purchases of machineries or equipments, pharma bills, which is taxable, will come to taxable, which is exempted, will come to exempt.
So here we have last question from this thing. In-house, just as you were mentioning, in-house canteen expenses recovered from employees, RCM is applicable. If yes, what rate would be applicable? So that is the GST taxation rate, I think, point is. But as far as the in-house canteen is there, whatever the things are there, that has to be covered.
As far as the canteen is concerned, it's beyond the topic, but I'll answer it. As far as the canteen expenses is concerned, two things. One is if it has been given without any recovery, canteen is given without recovery as a part of the CTC, as a part of an employment contract. Recently, the circulars and all has made it very clear, no GST will apply on this. This has not been treated as supply by employer to employee. It is only exchange of employment, consideration paid for the employment services which has been given. Now, either a part recovery or a full recovery has been done, it will be treated as supply by employer to employee, which is not exempted, and 5% GST has to be charged.
Excuse me, sir. Excuse me.
Yeah, Mr. Ashok.
Yeah. No, sir. Though I missed that issue. Salary, schedule 3 items, etc. You say it is exempt or it is not supply only.
It is not a supply, thereby it is not exempted, so it will not be part of 3.
Okay, so it is just to be excluded or from the total only.
So it has to be if that person, if you are taking that schedule 3 item from a registered source, you will report it under 5. If you are taking it from an unregistered source, you will put it under 7.
So this salary will be
salary will not even come under 2, sir. You can exclude it from 2 itself.
2 itself, is it?
You can exclude it from 2 itself. Schedule 3 items can be excluded from schedule 2 itself.
Okay.
Right, sir? Do you agree, sir?
I am not very sure because it says
guidance note. ICI guidance note is also clear on that, where they say that anything which is forming part of schedule 3 can be removed from your total expenditure. It did not form. So sale of land, any funeral, some expenses.
All those schedule 3 items which I explained.
Yes.
We can go with the guidance note. I'm not very sure about the guidance note, but we can go with that.
Same thing will be partners remuneration, right, sir?
Partners remuneration is not schedule 3, but it is not a supply. It is again a non-supply. It is only a distribution of your
appropriation of profit.
Appropriation of your profits here.
Yeah. So not to be included.
Yes.
We are not to take in the total itself. Wonderful seminar, sir. I have heard so many seminars, but this was too good. Very detailed one. And the question raised from the forum was very excellent, which clarified all the points. Thank you, sir.
Sir, any other participants who wanted to ask, kindly go ahead, sir. Unmute and ask. Any
Yeah, Mr. Hanmandlu, please go ahead.
Regarding hospital, it is not registered at all. And it will not get services, it will get services to people who are registered.
I'm not able to hear.
This question, what he says is, there is an hospital who are not at all registered for GST purpose.
Yeah, then they get services from the people who are registered.
No. As Sudhirji also covered, and as I covered in the presentation part of it, this clause 44 is applicable the moment you trigger the tax audit limits. We have to comply with clause 44.
Yes.
Now, our assessee is not registered at all.
Yes.
In your case, it is a hospital, it could be an advocate, it could be anybody.
Yes.
So, there is no requirement to register under GST, but he is subject to tax audit. In this case, also, clause 44 compliance is mandatory. But the critical point, as Sudhirji very nicely covered in his presentation, there is books to be maintained or records to be maintained under GST law. This GST law binds the persons who are registered.
Yes.
But your hospital is not registered.
Yes.
So you can confidently say that the books are not maintained and you can skip that clause 44 also. There's nothing wrong in doing that.
Okay.
That these details are not maintained, you can write and happily go without any worries. The problem comes when somebody is registered and he has to maintain the books. Then the challenge arises for them.
But sir, about the wines, bar and restaurant, the wines are exempted from GST. How to report this sales? Sales will not come. This expenditure only will come. Beverage corporation that will come. That is exempted. Totally it's exempted.
It will be nil rated or exempted. In that case, you have to report it.
Okay.
So you report it and you show under column 2 the total expense relating to that, and under column 3 that it is part of exempted. That is how it is.
Thank you. Thank you. Thank you.
Sir, good evening.
Good evening, ma'am.
Yeah, sir, we have 23 registrations under a single PAN. So we are having some support services from other GST registrations of different states. So the same will be treated as an expenditure as a distinct person. So do we need to treat that as an expenditure? But here the PAN is same among all the 23 registrations.
No, it's not required, madam. It's not a single PAN only basis we are going. So you can consolidate how you will prepare consolidated books of accounts. Whatever net figure you are getting, that if you put it is enough.
Okay, so it is completely PAN based only.
PAN.
Okay, thank you, sir.
They can give. Sir, here they can give if they wish so properly, but consolidation when it comes, it is based on PAN. They have to maintain branch wise and vertical wise for PAN.
What happens is what I have to report in 44 clause 44 is the financials which I am subjected to income tax audit, the returns filing. So what happens in two entity, one entity is a billing entity, another is a receiving entity. So this sale and this purchase gets knocked off.
Yes.
For the purpose of income tax compliance. Yes. Only for the purpose of GST, I have to treat it separate entities and I have to make my 9C, all those things I have to do. So there everything it will take. This is only for the purpose of GST. For the purpose of my Companies Act, for the purpose of LLP Act, for the purpose of Income Tax Act, one PAN, one entity. So because my trial balance for the purpose of income tax or financials for the purpose of income tax did not have this cross-charge expenditure at all, there is no requirement of clause 42, 44 to be reported. Even as a recommendatory also should not be done.
Yes. In fact, you may face challenges with our friend at CPC, where your expenses are lesser than what you're showing under 44. They will put unexplained expenditure and they will happily tax you at 60%. So you better be careful.
Never venture.
So I think the presentations, disclaimers, supplier versus recipient. So you were the supplier here. We under the exempted category. We were the recipients, and we both have under the 23 registrations of cross have knocked off plus and minus. So we are not subjected to reporting as well as GST. Right, sir. So that is the way. But I have certain things. One, Sudhi talked about drop shipment also. That was fantastic. Really, that the presentation of Sudhir in terms of clause 44 and explaining the exempt, non-exempt and the details were very, very in such a enriching and knowledge sharing that we have to think registered, not charged, unregistered, registered, disputed cases, composition and again, maintenance of records by chartered accountants and entities. These are, I feel clause 44 is an eye-opening for your, again, financial accounting as well as financial reporting for non-corporate entities. These are the gray areas where we have to start up today. It is an eye-opener for our all accountants fraternity as well as compliance fraternity. Taxman always looks from all the angles that wherever they can squeeze in tax and penalty. But it is our own improper understanding, awareness, which we have to do as an industry and experts. So what we are looking was that very good participation, interaction, and deliberation from all the sides. So with this, I ask Madam Lakshmi to propose thanks to.
Thank you very much for both the speakers, sir. Exemplarily given your presentations and very, very meticulously clarified the things and what exempt registrations and what nil rate of taxes and all these things. And disclaimers for professional point of view and for the industry point of view, you have already mentioned very lucidly, and all these things were presentations. Both presentations are very, very useful to the participants, and you have clarified number of doubts. And thanks a lot for both of the speakers and for your valuable time with us. And you explained the things because the due date is fast approaching. This is the right time for the participants to get their knowledge and implement the things in the right manner. Thanks a lot. For the participants also, we are also thankful to the participants. Without the participants, we cannot succeed the things. Thank you.
And here one announcement which in the beginning Mr. Murli also has told that these PPTs are available for the participants and they can, we will be sharing that on the request to Madam Lakshmi.
Certainly, I will
so we will be putting into the sharing who are registered, then definitely we will be sharing for their beneficial, because disclosure and disclaimers. I have been after Mr. Abhishek around every 2 hours. Sir, this is the important, and you have very, very, not only on clause 44, you have done for several ICDs in general also. Really, I am thankful to you for taking my definite calling every 2 hours, but you have sportively taken it, and because it is many people are discussing on this guidance note, this section says that is the thing, but practical insight is the word given by Abhishek, and Sudhir also agreed that yes, it is an insight. Definitely we'll go on the insights only, and we have done, and together we have delivered. I hope everybody has taken direct insights into the practical aspects of the clause 44. Thank you, one and all.
On YouTube also it is available on YouTube.
YouTube also we have already recorded, sir. Certainly we will share tomorrow PPTs. Now,
okay. Now, YouTube, which site, madam?
Which is
YouTube.
It is live on. Live. Open public. It is open for public, sir. Now,
no, YouTube. Where I have to click? Where I have to get?
FTCCI channel is there, sir. Please go through. FTCCI channel.
FTCCI.
Federation of Telangana Chambers of Commerce and Industry. And one more thing, sir, you have enlightened me on one announcement which I missed. Those participants who are not members of the FTCCI, they can avail. We have 20 committees of expertise, wherein an individual can be expert or master in one aspect or the other. But here we have a very big secretariat with expertise knowledge as secretaries. They will be interacting and sharing the knowledge, and if they want any representation to be done, that also can be done. So please become the members. You will get more than 300 informations through our reviews and previews and channel and online information. Thank you, friends. Thank you.
Because of your participation, this was excellent.
Definitely.
Because you ask so many questions, they get clarified.
Yeah.
Our speakers has to be congratulated, sir. They have taken very to the point, to the issue, because financial statement can be taken straight away. In fact, they have prepared in Excel also, which we think can be useful. We will share that also.
Right, sir. Thank you. Thank you.
Thank you once again to our good speakers and eminent experts, sir. Thank you, sir.
Thank you, sir.